Good afternoon. My name is John Mazzara with Remax Results, and today Danny Fluke is with me. He is the National Sales Manager with Kind Lending. Uh, Danny has a very extensive background with regards to mortgages, and he's going to share the self-employed mortgage bank statement program that will allow many people to purchase a home that otherwise couldn't. And I'm very excited to learn about it because I want to share it with my clients in Minnesota. Now, Danny has access to these programs throughout the United States. So in the event that you're watching this in a different state and you're like, well, I'd like to use it here too, reach out to Danny and he will connect you with the right person to get this product in place. Guidelines do change. So the way we're talking about it today is the way that it is today. Could be slightly different tomorrow, but just know that Kind is the leader in self-employed mortgage programs, and we're going to talk about a number of them. So with that, Danny, tell us about the bank statement program and how a borrower could use that.
So, thanks, John, for having me. Our programs for self-employed home buyers are broken down between different options, right? The most popular option is the bank statement program. So I'm going to give you kind of a 30-second overview of what that program looks like, and then I'll tell you what Kind does differently than some of those other competitors that are out there in the market. Okay. So on that bank statement product, what we're looking for is business generated deposits, right? So point of sale, transfers from a credit card processing company. Those are pretty easy to figure out, right? Then we get into kind of what I call the minutia, where with the home buyer, with the realtor, with the loan officer, myself, we're going to be diving into those bank statements and looking at those manually, page by page, and deciding what we can use for business generated deposits to give the borrower the most income possible, because obviously that impacts how much they can get approved for, right? So, and that's pretty much across the board. Most lenders that are in this sphere look at the business bank statements. We look at how is the business formed? Is it an LLC, a sole proprietorship? Is it, are there two partners? Is there someone that's 100% owner, right? So there's different ramifications on how that income is calculated. And that's the same across everybody, right? So where Kind makes a big difference is that we allow what they call dual income or mixed income. Most lenders, you're either full doc with W-2s and check stubs, or you're self-employed, right? There's no middle ground. There's no hybrid, right? And we say, hey, more income is better, right? So I have clients, I have my own personal pipeline, right? So this is boots on the ground stuff we're talking about. My personal clients, I had one that she worked in an IT department of a big corporation and had a W-2. And then she had her side business where she did consulting work, internet security consulting work, right? We allowed her to use the business bank statements from that consulting business and her W-2. So she got credit for both incomes, which substantially increased her ability and her buying power, right? So most lenders will not allow that. Another example is I had a Pilates instructor that we used her business bank statements. Her husband was a W-2 teacher, right? We used his W-2. So most lenders won't allow that, right? So that's the major advantage that home buyers and realtors like yourself have when they use Kind Lending as their lending partner. We deliver the commonality of everyone's programs, but we have proprietary options that we give your home buyers to make you more competitive in the market.
Outstanding. How much is a typical down payment on the bank statement program? Is there a range?
Yeah, it depends on the FICO score. Obviously, it's credit score driven as far as what the max LTV is, but the minimum down payment is 10%. And all that's required for that is a 700 FICO, right?
Okay.
So, and to put that in perspective, over 2021 and through the first 3 quarters of 2022, the average FICO for these self-employed home buyers is well over 720. Right. So these are very well qualified, very motivated home buyers that are out there in every market.
Okay, and that would be no PMI, correct? 10% down, no PMI?
Absolutely. Yes.
Okay, and the process of getting pre-approved. So let's say I'm a self-employed barber watching and I'm like, bank statement program, I do have mixed income, or I don't, I'm just have my regular business income. How do I get how do I get pre-approved, and how long is that approval good for?
So typically, great questions. So the answer to the last question is how long it's good for is typically 90 days, right? And during that process, we'll just be updating as soon as the last bank statement falls off, right? We just add the most current one. So
Okay.
we keep a fresh set of 12. We go back 1 year, right? So that's the answer to that question. The way that we do it is, again, like I said, we're going to look at those business bank statements. And the questions that I asked you are the same questions that we would ask the self-employed home buyer, right? How is the business structured? Are they 100% owner, or is it a husband and wife team, right? Is it the last loan that we just funded was auto repair places? They had 3 auto repair facilities, right? Different locations. It was 2 brothers and one of the sons, right? So one of the brothers is who was buying the house. Well, we used all the income from all 3 because he owned a third of each one. And then he got a third of that income. It wound up right around $60,000 a month is
Wow.
what he could use to buy, which was way more than he needed to buy a house. Right.
Sure.
But that's an example of how we go through those steps and how we go through that process to get them pre-approved.
That's fantastic.
And
Okay.
basically, once we issue that pre-approval, it's now property based. As long as the property qualifies as far as inspections and things like that, we push on through closing, and our closing times are, John, when was the last time a loan officer called you and said, hey, do you want to move the closing up 5 days?
Right? I can't think of
that. We do that all the time because typically it's 5 business days after we have the appraisal signed off on. So we receive the appraisal, it goes into the QC. As soon as they say this appraisal's good to go, that's when our clock starts, and our goal is to have the documents ready 5 days, right? Now, a lot of times we can't move the closings up because there's scheduled cleanings and the moving truck's not going to be there and things like that, right? But it's always nice to have that option to be able to offer your clients the ability to close a little early.
Absolutely. Absolutely. Is there a minimum loan size that you do and a maximum loan size that you'll do on this program?
Yes. 150,000 is the minimum loan size. And the reason for that is that it wasn't arbitrarily put out there, right? The reason for that is because with the Dodd-Frank legislation that they passed, on these non-QM loans, there's a 3% cap on all closing costs. So title, escrow, appraisal, lender fees, doc certs, all those different items have to fall within 3%. Well, it's pretty difficult to get that into a $4,500 number. And it doesn't matter if somebody pays part of it. It's just a hard and fast rule. So 150 is the minimum, right? And the maximum is 4 million. Once we go over 3 million, we need to get an exception. And that's based on reserves and things like that. Sure. But so this is for the full gamut across the board, from entry-level homes all the way up to multi-million-dollar places.
Could somebody do this on a refinance as well, or just on a purchase?
Yeah, we just closed one. We just had someone that got 300. They gave up their 3 3/4 30-year fixed, right? Went into a 7.5% loan because they wanted to take $250,000 equity out of the house.
Okay.
Right. And the reason they did it this way is that they would have to cash out over half their retirement to access that equity, right? So, or to access that capital. So they said, you know what? The difference in the payment, the difference in the interest is tax deductible anyway. So they said, you know what, we're going to go this route. We hate to give up that old loan, but this is where we're going to. And let's address the elephant in the room, right? What's it going to cost me? What's it going to cost the client, right? Typically, you're anywhere from 1% to, I've seen it as high as 3% over whatever the 30-year fixed rate is at a conventional lender, right?
Mhm.
So that's the difference between full tax returns, paycheck stubs, full doc, right? And no tax returns, using alternative methods to document the income.
Sure. Oh, that's fantastic. And could they go refi that up to 90% as well if they wanted without PMI? Or is that a little bit lower?
No, typically on the refis, they cap at about 80. And
Okay.
if we're doing cash out, it just depends on what that pricing versus the loan to value looks like. But on the cash out side, as long as we're under 70%, there's no limit to the cash out they can get. We've issued wires with $1.7 million, right?
Wow.
So if you have clients that are real estate investors and they want to access the capital of those where they have very low mortgage balances on very valuable properties, or maybe someone inherited a property and now they want to add a few more rental properties, we can access that capital. They can borrow against that asset and get unlimited cash out.
Wow. Insane. That's fantastic. Great products. Totally unusual. They do fund in 50 states or 48 states, or is it?
Yeah, we're licensed in actually 36 states.
Okay.
So if anybody wants to find out if they can either partner with us, or if it's a home buyer that wants to get options for not using tax returns, you said the information, our contact info will be at the bottom of the video.
Yes.
And if we're not licensed in that state, I've been in this industry almost 30 years. We'll find the answers for them.
Beautiful. Well, Danny, that is just wonderful. Anything else you want to add on this video before I say goodbye to us and wrap it up?
Yeah, the only thing I would say is that if you have clients that are self-employed, if you're self-employed yourself, these programs allow you to use up to 90% of your gross income for your mortgage approval. So, give us a call. If you're in Minnesota, give John a call. If you're outside of Minnesota, give me a call, and let's see if we can't get you pre-qualified and pre-approved for that house you want, not the house that your tax returns are going to let you buy.
Perfect. That's wonderful. And this is our first video in a series. We're going to be having 3 to 4 more here in just a moment. We're going to be recording those on specific other programs. So this is the bank statement program, but Danny has access to multiple programs that you're going to learn about that may work better for you or just differently. And so we're going to cover that. So stay tuned for more videos. Thank you for watching today. Reach out to Danny directly to get pre-approved or to begin that process. If you're in Minnesota, I would love to help you buy a house. Thank you very much.